All right, perfect. Hi guys, I'm Alex Logashov. I'm the founder of Fintent. We are a deal sourcing platform that essentially helps Ps, IBs, and other deal makers find companies that are exploring the sale of business, looking to raise funding, or experiencing distress. Today, we'll talk a little bit about Fintent's predictive signals and then how we use alternative data to predict when companies are coming up for sale. We'll talk a bit about e-commerce and retail M&A trends coming from our underlying data. And yep, yeah, no worries, yeah. And then, of course, we'll highlight 10 middle market brands that are exploring an exit. So this kind of ties up perfectly with the previous presentation about advertising and kind of the programmatic ad ecosystem and some of the ways that advertising has evolved over the past 10 years or so. Essentially, what ends up happening if you think about advertising and kind of going on the web, reading articles, etc., anything you do leaves some type of footprint, right? And within half a second of you landing on a landing page, the website is trying to figure out as much as possible about you, so they can serve you the most relevant ad. So what we do is that what ends up happening is that programmatic ad ecosystem then tags these behaviors and aggregates it at scale to kind of surface buyer intent and surface intent to purchase. So as an example of that, let's say you're shopping for a watch and then you're seeing that ad follow you around on the web, across the web, right? That's part of the programmatic ad ecosystem, what's called retargeting. Now, what we do is that we tap into this underlying data and we're focusing only on finance, business, news, and legal websites. We essentially then produce what's called financial intent, which is an understanding of what employees of companies are reading and researching on the web. So we can see as an example, okay, someone is going to Forbes or Entrepreneur, they're reading an article or watching a video, and that video is about sale of business, private equity, valuation, etc. So any of these relevant topics are related to sale of business. And we can do this for about 2 million companies in the US with a focus on the middle market. What we then do with this underlying information is that we run back tests. So we'll take companies that have been acquired, companies that have raised funding, announced layoffs, etc., or bankruptcies, look at their research activities 3 to 15 months prior to the event, compare them to similar companies that have not gone through any corporate actions during that same time frame. And then from there on, looking at the deltas in the research activities, and then building out we can build out ML models to then predict distress company acquisitions or fundraising about 3 to 15 months before they happen. Now, we have tons and tons of examples, like thousands of examples of this in action nowadays, but we can just talk about these two to start. So in this case, if you're looking at Hanky Panky is a manufacturer and a retailer. They announced their acquisition in December of 2025. And then we flagged them with high M&A intent in May of 2024 because we saw and produced kind of high M&A score and cap rate scores because we saw employees of the other company reading articles about growth equity, business valuation, earnout provision, board composition, etc. Another example is Once Upon a Forum. They just recently IPO'd in February of 2026, and we flagged them with high M&A intent and high M&A intent in April of 2024 because we saw employees of these companies reading and researching articles about investment banking, earnout provision, valuation. And then at the same time, we also saw deal makers. That's another score that we produced. Deal makers researching articles about companies. We saw deal makers like Goldman Sachs, JP Morgan, Evercore, many, many more reading articles about Once Upon a Forum. So combined with the kind of at the intersection of these two signals, we were able to make a call, make a prediction that these are the company that this company is about to go through some type of an event, right? So in this case, it was an IPO. Now, how well does this work at scale? This works really well at scale for middle market companies. So we routinely predict 30 to 40% of all middle market acquisitions across pretty much any vertical and any industry. Our sweet spot is 25 to 1,000 employees. And of course, this also works for e-commerce and retail companies. So what we've done for this presentation to help us kind of better understand, like add some value and help you understand some kind of e-commerce trends. I mean, obviously, we can look at the individual examples and companies exploring scale of business. What we can also do, we can zoom out and look at specific industries and industries, verticals, et cetera, to understand what's been going on within it and subsectors. So for this one, we looked at 23,000 e-commerce companies and retail companies. We put together that list with our using our AI-powered company search functionality. So we looked at companies that are based in the US with the employee range of 11 to 250 employees. We then used a multi-layered LLM approach to go in and to classify it into different subsectors. Right. So in this case, we looked at furniture and home decor, women's apparel, beauty and cosmetics, jewelry and watches, and grocery and specialty foods. And then what we've done is we've analyzed the trends, M&A trends for e-commerce versus all companies, as well as these specific pre-selected subsectors versus the overall e-commerce space. So what you're looking at here is the e-commerce M&A trends. Basically, essentially here we looked at, let's look at the research activity and the appetite of employees of M&A e-commerce companies on M&A related topics. So essentially M&A intent and M&A appetite. For them, that's the blue line here. That's the M&A index. Let's also look at the appetite of deal makers in e-commerce companies as compared to deal makers on all companies, all right? And that's basically the orange line here. So one would be basically equal. It would be the same, right? Anything above one is, is higher than average. Anything below one is lower than average. So what you can see here is that on average, and that's good news for folks in this room, e-commerce companies have more appetite on M&A or had more appetite on M&A than all companies. So they're thinking about the sale of business. At the same time, you have the deal maker score, and so you have the deal makers had a slightly lower allocation of attention towards e-commerce companies than the M&A companies, than e-commerce companies on M&A related topics, right? So long story short, what that says is there's an opportunity, right? There are a number of e-commerce companies that are looking for an exit, and they're being overlooked by by deal makers. Now, if we dive into a layer deeper here into kind of, let's look at the actual subsectors and compare the same type of an index for these different subsectors over time on M&A related topics versus the deal makers, and looking at kind of the opportunity there. What we can see is that looking at these five sectors, you can see highlighted in green there, it looks like grocery and food specialty foods companies seem to have the highest M&A index out of the five subsectors and sub-industries analyzed. And on the deal maker side, it looks like beauty and cosmetics are somewhat overlooked compared to the other sectors. Now, while that could be exciting, could be an opportunity on the deal maker side, if you then compare the indices and compare the difference in deltas in the indices there, it looks like there's not as much appetite for beauty and cosmetics companies to exit as compared to the, let's say, for example, grocery and specialty foods companies, right? And so that's kind of the highest delta. So that would represent to me the highest opportunity, as well as jewelry and watches. So with that in mind, we focused on grocery and specialty foods companies that are ripe for opportunity, and we'll put together a list of these 10 companies with the highest M&A scores over the past 6 months. So what we looked at companies that are standalone companies with no recent acquisitions or funding, and and obviously they would have to. They are not currently being looked at by deal makers, so the deal maker score is either low or non-existent, and they have a high M&A score. So if grocery and food specialty is of interest to you, I would highly recommend that you reach out to these companies. And then, of course, if you wanted to get reports like these on sectors or on any specific subsector in terms of the companies, you kind of reach out to me at alex@fintent.ai. Oh, and of course, I'll be around for any questions here for the next few hours.